Do you know why China's attitude to tariff war has been changed during recent years? Do you know why China was the only one country that has been exempted from the implementation of the trade war? Do you know, in such chaos, how was the real performance of China in the first half year of 2025? Do you know the future trend of China's economy? What will be expected in November deadline of trade war? In this video, first, we are going to talk about the tariff war and its progress, and the theory behind it, why China's attitude changed. In the second part, we are going to review China's real data for 2025 first half year and analyze the indicators and the changes. In the third section, we are going to analyze what are the implications for the trades with China. What are the potential growth areas? If you did not check the previous history, maybe you did not know that in the first round of trade war, which initiated in 2018, China did not perform so well. The current US-China trade relationship is highly complex, shaped by a tangled web of tariffs that have been imposed, adjusted, revoked, and reinstated going back to 2018. This ongoing situation, which first began under the first Trump administration and has continued throughout the Biden presidency, has escalated significantly since Trump took office again in January 2025. But China's attitude and countermeasures have changed dramatically. Reviewing the timeline together, we can find in April 2025, the level of tariff rates went up dramatically to more than 125%. By end of April, China Ministry of Foreign Affairs published a video to show Chinese attitude because US released some fake news about Chinese governors were negotiating with US every day and even would agree the tariff. The strategy changed behind China's negotiation because they gained the experience fighting with US nowadays. As China is the second largest economy in the world, with US, these two big planets will compete for the first place. So the competition will be in different areas lasting long. US will impose different measures to prevent China from growing up. Chinese began to know that Trump's business methodology. First, they give an incredible price and then let others to back him. However, in the previous stage in 2018, Chinese did not understand this characteristic. Further, China understands the basic needs behind imposing a tariff because US government is really in short of money. They need to repay large amounts of debts and face internal problems. The world's confidence in US has been fragile. Having analyzed above, if US want to collect money and American citizens themselves pay for the tariffs, as long as China should not be disadvantaged from other countries, it's US decision how to deal with increasing daily expense and complaints from citizens. Imagine a simplified example. China has a 10% tariff rate and all the other countries have 10% as well. So all exporters are in the same competition place in terms of selling or buying goods and providing services. But only American citizens need to pay the extra 10% of money. The micro situation also, there was a power balance shift. China has reversed its passive position by restructuring the supply chain, such as rare earth controls and strategic moves in Southeast Asia, and leveraging the resilience of its domestic market. China's strategy upgraded in the tariff war. The approach has shifted from tit-for-tat retaliation to a strategy of waiting for change, using internal pressure within the US, operational opposition, and stock market volatility to force compromise. For the first time, China has set the agenda in negotiations, shifting the focus from tariffs to structural issues such as technological restrictions. This turning point demonstrates that China has not only successfully diffused the risk of escalating the tariff war, but has also shifted the initiative in the game from passive response to rulemaking. In the coming deadline of November and future competition, China will not kneel down. Now we are going to the second part to see the real data of China's first half-year economic performance. In 2025 first half-year, the world was in a chaos due to different tariff war negotiations and different conflicts and wars in other parts of the world. How about China's performance? Here are some key figures. We can see that GDP increased 5.3%, mainly in service industry and second industry. The output of summer grain actually is an indicator for the food safety in China. Regarding industry output, it has increased 6.4% increase with good indicators in mining, manufacturing, nearly 10% increase in equipment manufacturing and high-tech manufacturing. By types of ownership, shareholding enterprises and private enterprises contributed the most part of the increase. In terms of products, there are new tech, high-tech products and increased nearly 40%, that is 3D printing devices, new energy vehicle, and industrial robots. Then in service sector, there is an increase about 10% in information transmission and software service. In terms of retail, it increased about 5%, similar in urban and rural areas. The sales of basic living goods have increased more than 11%, in which sports and recreational equipment showed a good surge. Regarding the investment in fixed assets, it shows a 2.8 increase, mainly in second industry. Foreign trade showed an increase of 2.9%, in which exports increased 7.2%, but imports decreased 2.7%. Foreign trade contributions is mainly by private-owned companies. Chinese citizen disposable income has been increasing, therefore will have capacity to buy. Coming to the summary of the key economic indicators, GDP robust growth is faster than 2024 whole year and above IMF April forecast. In terms of trade relations, even though the importation decreased a bit, but as China's open policy is increasing, foreign trade contribution to the GDP will be a very important part. Consumption upgraded categories, one part is home appliance surged due to China's trading subsidy. In the second half year, this policy will still be in place. On top of that, sport and entertainment consumption shows an increase of more than 20%. The highlights shows that consumption contribution to the GDP occupies 52%, so it also gives China that confidence to fight against external uncertainties. There are new quality production and high-tech exportation, especially electronic cars, lithium batteries, rare earth, and integrated circuits contributed more than 60% of the export growth. Above all, you can see the resilience in China's economy in the first half year. The Government Bureau of Statistics estimated that the whole year will achieve the targets in GDP increase, about 5% a year. Related with this most recent Politburo meeting on July 30th, Chinese government states that you will use active monetary and physical policy. You can realize the consistent statements from April meeting is that Chinese government will stabilize employment, business, markets, and expectations. About July 30th meeting, I introduced briefly in the previous video the key takeaways, which you can review from my playlist. The government emphasized that they will help boost the Chinese capital market, more convenient for corporates, including foreign investment, corporates and local corporates to issue stocks and get direct financing. In the past 10 years, Chinese capital, especially stock market, did not perform well. That impacted the wealth of the citizens. In terms of investing in general, buying real estate will not be a better option for Chinese citizens than stock market in the future 5 years. The government also mentioned improving financing and derivatives in renminbi. If you want to expand your business in China, you can think about finance or capitalize in Chinese market. It will help you to get a good rate to help boost your business in shorter time than depending on your own capital injection only. In the third section, we speak briefly about economic chains. We can see the future growth rate mainly will be in the new quality production, which means high-tech, high-efficiency, and high-quality area, such as aerospace, semiconductors, AI service. Service trade liberalization policy from the government will help to boost more investment in different areas, especially in free trade zones. Consumption spending is a good potential because e-commerce occupies 25% of total retail. So if your products want to enter Chinese market, it's necessary that you should also enter in e-commerce if you want to reach lower tier cities. Cultural tourism, medical health, and elder care consumption is also prosperous. Regarding trade relations, China will continue open to more countries and markets. You can see from the visa-free policy and other open policy to the foreign investment. Trade ties will be strengthened with ASEAN countries, Middle East, Latin. Thank you for accompanying me to the end. What will be your interest about trades with China? In next video, you prefer I share what is the reason and impact of Chinese government's push for unified Chinese market, or CIIE 2025 Business Trade Plan suggestion. Leave your comment below. This channel is about information useful for trades with China. We welcome you to review the playlist and leave your comment to help us improve. Thank you.